Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie, and let's take a look at the midweek market update as we're out here melting like a snow cone in July after Elon decided to take Twitter private. Bit of an interesting coincidence how the markets reacted to that. Doge, which I'll get to at the very end, saw that news and was very excited about the deal. I think that certainly uplifted prices over the past day. But people always want to know, in the very near-term sense, why anything is happening. People assume there's news, and in general, it's just best to zoom out and think about the big picture. What's been going on lately? We're highly correlated to legacy markets. That hasn't changed the slightest bit over the past month. We had some glimmers of hope. Maybe I think it was in February, early February, where we started to pull away a little bit. But every time we pull away from legacy, every time we pull away from the S&P and Nasdaq, we being crypto, we just get pulled right back in, just as we were today. And we sort of melted down with everything on an intraday basis, right? And like I said last video, this correlation hasn't waned. In fact, it's gotten stronger over the past 30 days, let's say, depending on which metric you want to look at. 30-day rolling, 60-day rolling, 180-day rolling, 365-day rolling. It's all significant on the correlation aspect. So paying attention to what's going on legacy is important here. Seeing DXY just scream higher to 2014 highs, seeing the VIX keep cruising past its intra-week highs. These are two things that are not historically bullish for BTC. That's just what it comes down to. And when BTC is breaking down, it's hard for everything else to remain stable in crypto land, including ETH. So we've still got that. That hasn't changed, obviously. And I'm going to lead with the TA. We're going to flip it and reverse it today. It's important. I was a scout. Okay. It's important to be prepared. If they taught me one thing that I learned, be prepared. I'm not saying we're headed for a 50% drawdown. I may have bearish goggles on right now because we are continuing to consolidate below the 20-week moving average. We are continuing to show signs of bullish rejection at this level over and over again. Volatility, despite the intraday volatility being extremely high, perhaps volatility on a higher time frame, on a weekly time frame, is actually contracting significantly, and we're at historic lows for volatility. I'll look at that in a second on a weekly time frame. But if I'm looking for a plan, if I'm trying to construct a plan here, okay, and I'm thinking to myself, if this, then that, this is a massive decision tree. If lows, then I do this, right? If this level, then I want to do this. It's just important to have a plan. It's important to look at what might happen because on-chain stuff, that looks great, right? Transactions are rising, active address is rising, Lightning Network rising. ETH is a little soft. I'll look at all this in a second, but the long-term health and prospects of crypto from a decentralization standpoint continue to look more and more fantastic by the day. The problem is the price. so I'm going to lean on TA in the near term. And like I said, here's your historic 200-week moving average since 2014. Doesn't mean it'll hold in the future. Certainly isn't a prediction by any means or a call. But if I'm looking for places to step in personally, that's where I'm looking at. That's where everybody who's paying attention to TA is likely looking as well. Now, the 200-week moving average is going to keep moving up week over week, slowly and slowly and slowly in this asymptotic sort of fashion where it'll never touch, but it'll keep moving up so long as price just remains flat. But if there's one support that has a high conviction, for me, I like that level. Now, this may take months to play out, right? I don't know timing at all. I don't know anything about any of that, but that's where we're looking on a massive, massive zoomed out scale since 2014. That's what's played out pretty well. And when we're talking about contracting volatility, what I use to define that is Bollinger Bands. Bollinger Bands are a measure of two standard deviations above or below the 20-period moving average. In this case, it's the 20-week moving average. So if price stays within two standard deviations of the 20-week moving average, bands contract, and they keep contracting, right? Those two standard deviations keep contracting. And that's what you're seeing here. That's what you're seeing in the representation down below. Bollinger Band width is a measure for that. And the first thing I look at is, are we squeezing, right? Are we above or below that 20, that key level, to sort of tip the hand, tip the bias one way or the other? Has this happened before? Has it been wrong before? How many times has this happened before? What did price look like when it happened before? What happened, right? What was the result? So this has happened about 8 times before, depending on how you want to count these. It's really only ever been bearish that one time, as far as this indicator is concerned. In 2018, there were shades of bearishness back and forth in 2015, and we could very well be headed for, a year of chop, right? Like, this isn't saying there's going to be a resolution tomorrow. It's just saying volatility is extremely low. And I tweaked this setting on this coloring to show that, the overlay. So we're below the 20, bands are tightening. Typically these last 4 to 6 weeks, maybe. We're in week 2. And you can see how much lower volatility can even go here. Not much lower, but it can go lower, right? And this typically says there is some sort of resolution should volatility continue to decline. So there is an end in sight as far as the lack of volatility is concerned. And not much has changed week over week. I'm still watching this. It still leans bearish. It's going to lean bearish until it's above that 20 MA, which is somewhere around 41.7 currently. So this is a bleak picture for the potential future, right? This isn't a guarantee, but it's a potential future. Something else to watch is the 2-year moving average multiplier. Down here is the 2-year MA. This is 5 times that in the red. Historically, this has acted as an oscillator. Oversold, overbought, we're approaching oversold on this indicator's terms. And some people may think of it as a DCA in zone, dollar cost average in, dollar cost average out zone up here. For me, the bullish silver lining of all of this is averaging back in with cash personally, right? I'm not telling you what you should do. This is an investment advice, but for me, I like stuff like this where there's very few decision points where it's telling you what to do. It's the entire history of BTC, right? We don't have 40 years of data, but we have 10-ish to look at, and it's done pretty well. So I like this indicator in that regard. If we zoom in just a bit, we can look at the pitchfork here, pick 3 points to get a rate of change. And the midline is generally where price likes to live. You can see we're getting on the oversold side of things here as well. One possibility, of course, is that this range holds and we just keep bouncing back and forth and just chop, chop, chop for whatever amount of time. So it's possible that we find some sort of support within this range, the pitchfork holds, right? And we continue a mean reversion attempt somewhere to this midline. Definitely a possibility over the next few weeks. That's also something to watch for. Now this ascending triangle that I've been watching for, I don't know, since March, is very likely to be extinguished here on lower lows. I'm not going to keep redrawing this diag as some people do, but as TA goes, we had the breakout from 44. We failed. I wouldn't even call it a fake out. It was just a failed breakout. We really didn't have a significant volume pick up there. We got held down by the 200. We got held down by the yearly pivot, held down by VPVR as well. And now we're just back in the wash zone from 30 to 38. So as far as expectations of this pattern, for me, they are extinguished. Dunzo, as I like to say. Looking at the on-chain stuff, again, you look at this transaction-wise, and initially you may think, not knowing that there are additional avenues to send transactions like batching or more complex transactions, you'd say, oh, well, we're down pretty significantly from all-time highs in 2017. We're down from highs in 2019, right? But the network has certainly changed over the past 4 years, adding scaling initiatives and measures that may start to eat away at on-chain transactions, at least by this metric. One of those being the Lightning Network as well, which moves transactions to a second layer. So looking at the past few weeks, still in a range, right? This doesn't look like it's game over, as much as price does on-chain wise. Even active addresses here on a monthly basis, still well within the range. It doesn't look like 2018 where everybody left and kind of didn't come back for months. It's much different than that. This drop in active addresses here was corresponding with the mining exodus in China, and that's somewhat recovered. But to me, that was a pretty clear cause and effect. Yes, it happened at the same time with price, but it makes sense that it happened where it happened. So even here, active addresses look fine. If you look at balances on exchanges, continues to decline. One thing to note on how this is different than 2018. In 2018, we saw deposits continue throughout the entire period. In 2018, prior to the move to 3K, now I'd certainly be much more bearish if I was seeing coins getting sent to an exchange, which ultimately means they're for sale, versus float drying up, supply drying up, that sort of thing. So this is certainly leaning towards the bullish side of the conversation to see coins leaving centralized exchanges like that. And just another view, the day over day view, you can see 80 to 100,000 BTC leaving exchanges on any given day over the past couple of weeks, just continuously, which is certainly unusual. The obvious question is, where is it going? And my answer is usually it's being squirreled away, either in cold wallets, custodial solutions, borrowing solutions, lending and borrowing, that type of thing. And again, I'd be much more bearish, and it would probably make more sense if you were seeing deposits on exchanges as prices were declining. But you're seeing this weird bullish mismatch here between supply and price, which is certainly interesting. Something else, again, hodl waves, which measure coins that have moved over the past year. This metric is at an all-time high, meaning there have never been this many coins that haven't moved in the past year, somewhere around 65% of the total supply. And I like to compare this a little bit to proof of stake, because when you look at the staking list and you see 65 to 75% of the coins being staked, this isn't unusual to see a network be used more for banking than necessarily transactional activity. That's kind of normal for cryptocurrencies, and this will wax and wane with highs, obviously, and kind of goes against the whole narrative of if something's deflationary, why would you ever spend it? You just don't see that with crypto. When prices go up, you see people moving coins around because they're selling them. They're, when somebody develops a life-changing position or amount of money, they typically tend to change their life with it. So that certainly dispels or helps to dispel the narrative that why do anything with Bitcoin if it's truly deflationary? Because people do spend it. I've spent it. It's not like it's unspendable by any means. And here's the Lightning Network capacity graph. And again, this is a metric to measure activity on Bitcoin's layer 2, where transactions are nearly free and nearly instant through bidirectional payment channels that are connected in a hub and spoke model to all sorts of other connections. And this helps alleviate some of that transactional activity on the main chain on layer 1 that could otherwise happen somewhere else more cheaply and quicker. And even transitioning to ETH, again, none of this looks hyper bearish, right? Transactions essentially holding levels of 2017 all-time high, certainly down from actual all-time highs in transactional activity here, but there's this baseline activity on ETH, whether it be DeFi or NFTs, borrowing and lending, whatever it is, still here, regardless of price, agnostic of price. Active addresses have begun to decline a little bit on a monthly basis, certainly well within that range though. Again, if we zoom way out to 2018, that peak came rather quickly, whereas here we're seeing this baseline activity sustained here, regardless of price, at around 500,000 active addresses a day. These are addresses that have changed in value over the previous day. That's all that means. So it's a slightly different metric than transactions per day, which for ETH, still sitting above 1 million transactions a day. ETH on exchanges as well, continuing to decline. Again, I would be much more bearish if, like in 2018, which is what you'd expect to see, ETH coming back to exchanges, price declining. ETH is coming back to exchanges to be sold, right? That is what's going on here. And you're definitely not seeing that here. And you could argue there's DeFi, there's other ways to trade ETH now than centralized exchanges. That's fair. But nonetheless, it's going elsewhere other than an exchange. Maybe it's being staked. Maybe it's being sent to some lending and borrowing DeFi platform, but it's not being deposited to centralized exchanges. Which to me are an exit ramp because that leads to selling to fiat cash and then leaving, right? So we're not seeing everybody exit stage left just yet. And again, the net position, we're seeing a significant amount, 1.1 million a day. ETH leave exchanges. And again, where is this going? Custodial solutions, lending and borrowing, platforms, staking, or just into the DeFi ecosystem in general. And as far as ETH TA is concerned, it had a shot. It had a real decent shot at a 5,200 bullish cross here, which to the TA people is an extremely important, easy litmus test. Are we above the 200? Do we have a bullish cross, right? If the answer to both of those things is no, then many people remain neutral to bearish on anything, right? So currently we're below the 200 with a bearish cross. As ugly as this looks, again, we're still within the range of 2021. Not too much has happened, even though we've sort of walked up and down the entire range. There's no bullish or bearish divergences down here. Still well within the VPVR, the volume at price, from 1,800 to 3,000, right? Not much has really changed in the grand scheme of things. Obviously, that's a massive range, but this is the range we're in. If you look at ETH on the 1-year MA multiplier, not as clean as maybe the BTC version, but telling you the same sort of oscillating conditions, overbought, oversold. The caveat here is that, this stayed oversold for a significant period of time. This was 1 year in that zone and kind of took 2 years to get back to that level. So this is definitely not a promise, definitely not investment advice, but if I'm looking to DCA in, this is the first chart I'm looking at because it's telling me, okay, is this overheated, right? Is this running hot, or is this pulling back based on this average? And we're currently dancing around the oversold zone. And then just a lightning round of some alts here. DeFi Perp, which is an index from FTX of DeFi coins based on market cap. Mostly Uniswap is in here, but there's a lot of other stuff. Just as a broad sentiment indicator, we had that mean reversion a few days ago, I guess a couple weeks ago now, and just got rejected out of this range, rejected below the volume level. So I certainly don't have a near-term bullish expectation for something like this product, this futures product, right? It probably just chops around in this range, but there's no definitive setup or trade for me here, as far as I'm concerned. RSI also telling you that this is below 50, which is bearish territory. So on the 10,000 foot view for DeFi, it's on a collective basis, not super bullish there. We can look at a few other things. We're going to look at Luna, just sort of go down the market cap list here. Luna's definitely looks unlike most things where it's just crushing highs day after day after day. Still holding those highs rather well. My concern here is that a potential rising wedge is forming here, much like plane just going higher and higher and higher, eventually kind of stalls out. This is a very aggressive kind of 45-degree angle against BTC. So it's natural that stuff like this pulls back eventually. It's not the end of the world, but just sort of managing expectations and developing a plan around something like this. So Luna still looks okay, especially compared to everything else. Solana against USD and BTC. Again, much like ETH here, where it had a chance to cross bullish on the 5,200, just didn't, right? Sol BTC still looks okay. Sol USD looks okay, right? But it's not compelling. I say it doesn't look bad enough to buy, certainly from my perspective. And it's not screaming the trend is flipped. So we're still very much in the range here on Solana. BNB very much the same, still in that range, despite even this bullish cross on BNB BTC. Still very much trendless, let's say, right? Trendless chop, murky waters up here. ADA certainly leaning heavily bearish against the 200-day moving average here. You can see it get rejected a couple times on BTC and USD here. And to me, this looks more trending bearish than most other coins, and certainly looks different than Terra in that regard. DOT, much like everything else, that's ranging. Not much has really happened here. Obviously, this has looked better than it has now, but at the same time, it's still well within the 2021 range. Not really too much to comment on there. AVAX kind of holding levels near the 200. There's no clean bounces here of support one way or the other. This AVAX BTC chart's a bit concerning if you're bullish, because it's kind of setting up for a descending triangle here. Just a run-of-the-mill 5,200 bear cross setting up there, as well as on the USD chart. So certainly no strong whiffs of trend reversal going on there. And waves I want to talk about because the USDN algorithmic stablecoin is unraveling, and this is what happens when you have a stablecoin tied to the chain itself. The value, one sort of eats the other. You rob Peter to pay Paul. It looks great when it's going up because you can mint. You hold your peg. This was the exact high when the peg started to decline, and then it's just a runaway freight train. And now USDN is actually under collateralized. You can see it hasn't been able to regain the peg as waves continues to bleed and bleed and bleed. And waves will continue to bleed, as will this peg most likely, because you need people to step in to take the other side of this trade, right? And sort of buy the blood or buy 96 cents, 94 cents, right? It's just this endless loop of selling to try to shore up the peg, while at the same time liquidity is leaving the building. So waves is in for probably continued hurt here as it attempts to get the USDN peg under control. And then lastly here, just going to mention Doge, which continues to hold near 14 cents, tied to Elon tweets most likely. But historically, Doge has lived in this 0 to 100 sat range against BTC. That's say 16 to 103 sats. It's currently still at 370 sats. So from a level to level TA support, 100 is where it wants to go most likely. And obviously a lot of headline news can influence this one way or the other. And you can't ignore it, as silly as you might think it is, because we're all sort of tied together in this crypto soup. That's all for this one. Like, dislike, comment, share, subscribe. Let me know if I missed anything. Let me know what you think about the markets, what's going on in the comments below. And happy trading.